bust cycle. Today I'm going to talk to you about gold, stock market, and real estate. Fellow Toastmasters and welcome guests. In 1973, it was $300 for an ounce of gold. In 1983, it was $300 for an ounce of gold. 1993, still $300 an ounce of gold. 2003, $300 an ounce of gold. This is a hard asset, gold. Why is it $300 for 30 years? It's a good question. All asset classes go through a boom, bust cycle. They go up, it's the boom. They crash down, it's a bust. The other part of the cycle that no one talks about is when no one talks about it. And that's just when it doesn't really do anything. No one's talking about it. And that happens to real estate, stocks, and gold. So the way the boom-bust cycle works, first, the early innovators, the people with a lot of capital, a lot of money, they all decide something is not valued correctly. These people go ahead and they invest large amounts of money because they see an opportunity. The next thing that happens is investors then see gold hasn't moved in 30 years. And it's gone from 300 to 400. So then they start investing in gold. A little before you know it, it's at 500, it's at 600, it's at 700. Gold went from 300 about 3 years ago to $2,000 an ounce. That's a huge increase for something that didn't move for 30 years. Everyone says gold's going to $5,000. I heard one of these experts say, when people start breaking into homes and stealing for gold, it's a top. Sure enough, when it's $2,000 an ounce, people on the radio and the TV reporting all sorts of gold robberies. $2,000 an ounce was the top for gold. It didn't move above that. Gold then dropped to about $1,200 an ounce. It basically stayed there. I don't know where gold's going to go, but we'll tell you this. It went through a boom, bust cycle, then everyone stopped talking about it. People are putting vending machines in malls and selling jewelry, and people were buying scrap metals. Remember all the commercials for buying scrap gold? That stopped. Now take the stock market. Same thing. Boom, bust, cycle. When you're buying a stock, what you're actually buying are cash flows of the company. Because you don't physically own it. You're just buying the expectations of earnings to go and grow through periods of time and get dividends. See, with stocks, it's the same thing. Stocks become very cheaply valued, and no one wants them. The experts, the big wallets, the Goldman Sachs, the Morgan Stanleys, the hedge funds, they buy up everything. It starts moving, starts going, starts increasing in value. Next thing you know, everyone else starts buying because it's been going up. We're in a bull cycle. Everything's going to keep on increasing. But then it gets to a point when everyone starts making money, they start telling their friends to then get in. And then when people who don't know anything about stocks start buying and talking about stocks, you're at a top. Because when people who don't know anything are doing it, run away. Then it crashes, then busts. Then everyone gets out, and then everyone says it's rigged, and everyone complains about it. But if you're a long-term investor, the companies are still making money, you're still buying cash flows, it still continues to grow. But your stock doesn't guarantee to go up or down. Now take real estate, the third of the boom-bust cycle. In the 80s, we had double-digit inflation. I don't remember it, but I read about it. And if you remember, gold didn't go up. Double-digit inflation. Gold, a hard asset, didn't appreciate. So you buy gold, which is to protect against inflation and the devaluation of our currency to mitigate risk, and it didn't do anything. Real estate, Real estate went through a 70s boom bust cycle, and the end of the 80s, there's a boom bust cycle as well. But 10% inflation, 15% inflation, 8% inflation in the 80s, it didn't affect gold, a hard asset, it didn't affect real estate, a hard asset, or depreciating asset, because the repair gets older. So the latest boom bust cycle with real estate is by word of mouth. Everyone who's buying property in the early 2000s was making money, telling their friends to buy property because they are making money. And then the word kept spreading and spreading. And back then there was no rules and regulations, so you could walk in, get a loan, 10 minutes later own a property. No background checks. That's all changed. But we're now in another boom bust cycle. How long will the boom go? How long will the when busts occur? When will no one talk about it? Because it's not interesting. I don't know. But people are now talking about real estate, and people that don't invest in it are now investing in it because their friends are making money. And it's starting to become a little dangerous again. I don't know when it'll be over. I don't know when the bust will occur. I don't know when it won't be interesting. But be careful. Make sure to mitigate your risk. Invest in all three. Do it smartly. Read a lot of books. And watch for the next boom bust cycle. Fellow Toastmasters.